At the time of writing, Bitcoin is trading at $24,289, up 6.1% in the past 24 hours, while Ethereum is up double that, 12% in the past 24 hours, trading at $1,880. The overall crypto market is up 6.6% in the past 24 hours. But crypto isn't the only thing that's pumping. Traditional markets have surged as well. The Nasdaq closed on Wednesday at 12,855, up 20.8% from its recent low in November of 2020. The S&P 500 hit its highest level in 3 months as it jumped 2.1%, and the Dow gained 535 points, which is a 1.6% gain. The bullish action across both markets is a direct result of the recent CPI report. The Consumer Price Index rose 8.5 in July, from a year ago, which was below expectations. Economists surveyed by Dow Jones were expecting increases of 8.7% and 0.2% respectively. Core inflation, which strips out volatile food and energy prices, also saw a smaller than expected increase. All of these factors will be weighed by the Federal Reserve along with other key economic data ahead of its September meeting, where analysts and economists are considering that interest rate hikes might also be lower than expected, which can lead to a bull run in the crypto markets. While this might be a strong sentiment in theory, in practice the charts are telling a different story. While inflation seems to be tapering off for now, it's still relatively high and the macro environment is uncertain. Because of this, the charts are showing that whales are selling off to de-risk. In the specific chart being referred to here is the accumulation trend score, which is an on-chain indicator. The accumulation trend score is used to determine whether entities are actively accumulating coins and is considered a much more accurate indicator of the overall market sentiment toward buying and selling, as one can apply it to any cohort to determine the behavior of any particular group. The indicator is made up of 2 metrics: an entity's participation score and balance change score. An entity's participation score represents its overall coin balance, while the balance change score represents the number of new coins bought or sold over 1 month. If the accumulation trend score is closer to 1, that shows that the largest part of the network is accumulating. If the score is closer to 0, that shows that the network is mainly distributing its coins. When we look at Bitcoin's trend score, it's worth noting that exchanges and miners are excluded from the metrics. Bitcoin's accumulation trend score from April of 2020 to August of 2022 shows 4 distinct accumulation periods. The accumulation periods occurred in March of 2020, early 2021, early 2022, and late May of 2022. The most significant accumulation rate was seen in March of 2020, which was the beginning of the COVID-19 pandemic. The major sell-off occurred in the wake of the Terra Luna crash in late May, and in early July we can see a major accumulation spree. When we look at the highlights in red and yellow, periods of coin distribution followed all periods of accumulation. Some of the highest rates of coin distribution were seen during major events such as the exodus of miners from China in the summer of 2021 and the start of Russia's invasion of Ukraine in February of 2022. As we look at the accumulation trend score, we can break it down by cohorts: whales and shrimps. Whales are defined as addresses owning more than 1,000 Bitcoin, while shrimps are addresses with less than 1 Bitcoin. Both whales and shrimps have been aggressively accumulating BTC throughout July of 2022, respectively. However, as August progresses, the rate of accumulation among whales is beginning to decrease. The accumulation trend score is showing that the only entities still staking BTC are shrimps, which have kept accumulating. Even when the majority of large holders began selling off, July was the most significant accumulation month for small holders since 2018, with shrimps increasing their balance by over 60 BTC in a single month. The second largest accumulation was in December of 2017, as Bitcoin reached its all-time high when shrimps accumulated 52 BTC in 1 month. The overall macro uncertainty has pushed many large holders to de-risk and sell off their BTC holdings. It appears that many whales are anticipating a hard winter and looking to get as much liquidity as possible. What do the whales know? What do you think is the reason for the shift in accumulation score? Leave a comment. If you found value in the content, hit the like button, as that greatly helps the channel find similar viewers like you. If you're not subscribed to the channel, make sure you subscribe, as we put out daily content to keep you up to date on the current marketing news. Thanks for watching, and we'll see you in the next one.